Rakeshji was a tough taskmaster, and that was like I was working at the fountain of knowledge. We have done injustice to the stream of arts. Investing is called the last liberal art. What we don't want is an optimist analyst. We rather have a skeptical analyst, an optimistic investor.
If you are a student of finance and investment or a young professional just starting out, this interview promises to be a masterclass on various aspects of the field as our special guest shares his expertise, wisdom, and valuable insights with us. Hello and welcome to the Learning Project. I am Harsha, and today I am in conversation with the CIO and founder of Valuequest Investment Advisors, Ravi Dharamshi, who has over 22 years of experience in Indian public markets. Valuequest is into portfolio management services, private equity fund management, and is set to soon launch an alternative investment fund. With public market assets under management of $1.7 billion, Valuequest has delivered compounded 21% net returns to its clients for over 10 years. Ravi, it's an absolute honor to have you with us today. Welcome to the Learning Project.
The pleasure is mine. Thank you.
Let's begin with a brief look into your academic journey and the start of your career.
Sure. I'm from a typical Gujarati family that focuses on education, but has a gene of business in them. So business and markets were always part of my gene. However, when I started off, it was never a given that I am going to join markets. I was graduating from college around the time when the dot-com boom was going on. So the technology boom. So the lure of Silicon Valley was very strong at that point of time. I dabbled after doing my commerce graduation. I dabbled with doing some coding and programming. I did an intensive diploma in advanced computing programming. But as luck would have it, by the time I finished, this was the heady days of 2000. So then the bust was on the anvil as well. I did my post-graduation in Masters in Finance, hence. And at that point of time is when my real love for the markets and investing actually started blossoming, where I read up a lot of books on investments. And honestly, that's when the true journey began. So I didn't start off with getting into the markets as my default choice, but I came around to the same conclusion maybe later in the day.
Fair. And then what was the next step once you came back after your education abroad?
So those were tough times. When I graduated, that was in 2002, and this was right after 9/11. So from the heady days of dot-com boom, we went into a serious recession and a bust. So at that point of time, even some of the Harvard graduates were getting their offers rescinded. So even though initially I had planned that I would probably stay back in US, work a little bit, get some experience working on the Wall Street, that was always my kind of the lure. But as timing and luck would have it, I decided to come back. At that point of time, it felt like a compromise. But after, in hindsight, I can say that turned out to be the most serendipitous decision in my life, because the next 5 years, India had a fantastic boom. And I got to spend those 5 years working with Rakesh Jhunjhunwala. And that was like I was working at the fountain of knowledge. So that was a great period for learning as well as earning.
Oh, that is wonderful. So coming to the topic, of your interning with Rakeshji, how important is it, you think, to have a mentor? And how do the dynamics of mentor-mentee relationship work?
I spent 5 years with Rakeshji. So it was not a job, but it was a good apprenticeship. And I worked as a pharma analyst and a technology analyst. So one thing I would say is that I learned a lot because Rakeshji was a tough taskmaster, and you could not fumble or say something which was factually incorrect. So doing my homework before I go to him and being able to withstand my opinion in the face of such a strong personality was always a challenge. But I think that is what prepared me for the day where I could develop my own independent thinking and I could do my in-depth work. All that was possible because Rakeshji was such a tough boss. And it is very important, that one has to have a mentor in the market. Markets tend to, everybody has to learn the market. It's like swimming, where no amount of reading can help you. You have to finally jump in the water. But having a mentor and having a coach definitely guides you, and at least you can avoid the basic mistakes. How to think about things is something that you tend to develop in a better way with having a mentor. And a mentor, not everybody has the time to teach a young ones coming into the market. So you have to make yourself coachable, or at least make it worth their while to teach you something. So for that, it is not exactly a give and take, but at least you also have to consider adding some value to the mentor. So make their life easier in some way, and sure enough, they would be happy to teach you with their vast amount of learnings.
Ravi, I remember having this conversation with you when you said that, Rakeshi did not believe in managing other people's money. So what got you to think about setting up Valuequest?
See, if you have achieved what you had achieved in what Rakeshji had achieved, it's easy for him to say there's no point in managing other people's money. While I was still looking for my calling in life, and honestly, I was not yet sure what I wanted to do in life, but I had acquired some skill sets working for him. And there was a lot of brainstorming I used to do that day. I left him in 2007, and I used to interact a lot with my co-founder, Samir. He is a college friend. We used to discuss a lot what we should do in life. And he was also reaching a point where kind of he was getting frustrated with the corporate life that he was part of. So one thing led to another, and we reached a conclusion. So my objective at that point of time was to institutionalize research. And institutionalization essentially means that it becomes a firm with discipline, focuses on generating ideas that create wealth. So it was important. As part of the institutionalization journey, we reached a realization that it needs to be a profit center and not a cost center if we really truly need to institutionalize. So converting it from just a research firm to an asset management company is the decision that we took, and that's how we embarked on this journey. But yes, I did face a lot of resistance. Rakeshji himself was of the opinion I should not do this, I should focus on making my money. And my dad was also of the opinion, and of the same opinion. And what he said is that if you lose somebody's money, then you lose not only the money but also the relationship. So from that, I took that to heart, and I decided that whatever I do, I will definitely try and do a good job at it. It was the pursuit of excellence that we will be driven by, rather than becoming the largest AMC or any such goal.
Right. Great. So we will speak about Valuequest's journey a little further on in our interview, more about it. But for now, I want to know what are the basic academic qualifications and skill sets that makes a candidate start apart when you recruit freshers?
See, anybody who's joining the field of investment and research, the bare minimum they should aspire to is becoming a good investor. Not everybody becomes a fund manager, but at least you can do investing at your own end. And the way this journey progresses is that you start right at the bottom rung, where there is a lot of grunt work involved, is being an intern, associate, or a junior analyst, and progress all the way up to the assistant fund manager. However, it's not so much the educational qualification that matters. Of course, we do employ a lot of CAs, CFAs, and MBAs, but that's because it's the way of thinking that those people have developed. It's not the degree that we are looking for. What we are looking for is an eye for detail. Somebody who can, with a tooth comb, go through a balance sheet and unearth something that is amiss. We need somebody who has the wider perspective, who can connect the dots and articulate it properly, so that we can base our decisions on that. So those are the kind of skill sets that are required. And doing a CA, CFA and MBA kind of prepares you for that. That is why those qualifications tend to get more weightage in the recruitment for an investment and research firm. But one thing I have noticed is that, see, in our investment also, I remember one instance where we actually interviewed a girl and she was a topper in her college. But she actually totally lacked the perspective of the wider real world. She had never read a newspaper. If I were to ask her a simple question about the business world, I don't think she would know anything. So that is definitely a deal breaker for us, that even before the degree or education, what we need is the passion for equity markets, the passion for business, wanting to ask questions, wanting to know what is happening in the real world. And that is what draws us to a candidate. So, I would say degree is a hygiene factor, but the passion for equity markets is what tilts the scale in your favor.
So, are there any fundamental emotional or mental qualities you would say along with this that students need to start cultivating right away in order to last for a long run in this field? Yeah. Like, say, patience.
Absolutely. So, when you start off in this field, usually you will be ending up wanting to become an analyst. And at that stage, it is very important to be curious. It is very important to be skeptical. It is very important to be questioning of everything, not believing everything that you read. The difference between a journalist and an analyst is journalist reports what is being said and analyst questions what is being reported. So we are looking for minds that can question, and that I think is an important quality that we would want our analysts to have. However, as you progress in your career over a period of time, once you collect enough experience, as an investor, you need to become more patient, more diligent, more disciplined, and have a touch of optimism as well. Because to be a good investor, the first quality is that you have to be an optimist. But what we don't want is an optimist analyst. We rather have a skeptical analyst, an optimistic investor.
Okay, so remember, you have to learn to be a skeptical analyst and an optimistic investor. Through the new Education Policy 2024, government has broken the barriers between higher education streams. And it's actually really encouraging flexibility in the choice of subjects. So do you think a student of finance is likely to have advantage if he or she chooses to study one of the social science subjects like psychology or sociology?
I think this is a great breakthrough that we have done. I remember my days where we were kind of automatically sorted into 3 streams. If you got more than 90%, you are going for science. If you got anywhere between 70 and 90%, then you are going for commerce, or anything less than 70, and automatically you are kind of going to arts. And anybody who was not academically inclined was classified as going to arts. However, I think we have done injustice to the stream of arts. In fact, investing is called the last liberal art. And what is liberal art? What it means is you are not focused on a discipline, or you're not focused on going deeper into one particular stream, but arts major tend to have a more holistic view of things. And it is a multidisciplinary approach that is required in investments. So learning from other fields like psychology, sociology, biology, mathematics is very, very important to develop a diverse perspective as an investor. Yes. In fact, Charlie Munger says something that you have to have a lattice work of mental models. What exactly is he trying to say? He's saying that there are concepts from other subjects, like say engineering or from biology, which actually can be applied in the space of investing. And even just for becoming a better and wiser person, you need to have a knee depth understanding of various other subjects also. So I think it is a great change that we have achieved, and finally we will have probably people with a more problem solving attitude rather than having a very myopic view of things.
Ravi, I come across students who dabble in day trading. Thereby, they end up losing focus on academics and put strain on the limited resources of their parents. What is your take on this?
It's a very unfortunate situation. There's a quote that goes, day trading is the toughest way to make easy living. I don't know why people think that they have the right to win in this market. The odds are stacked against them heavily. There are studies out there by SEBI which says that 91% of the people tend to lose money, but 91% is for trading. I believe the number for day trading probably would be much, much higher. And I would say 97-98% of the people lose money. And I understand the lure. People want to make money at an early age so that they can spend. But honestly, that is absolutely the wrong path to go on. Not only do you end up putting strain on your family relations, but you also are wasting tremendous amount of your youth time, which could have been productively used towards gaining knowledge. So, but I don't know, is there a way around this or no? People need to understand that read the relevant investors, read a little bit, understand how they have created wealth. How many day traders do you know who have gone on to become billionaires? If there are none, then please don't get into that activity. And people promoting those activity, they make their money by probably coaching or selling their courses. So let's not get there.
And the students often ask me this, that then how do you make that basic capital for you to start investing?
That is a conundrum for sure. It's a chicken and egg story. You need capital to make more capital. You cannot create wealth without having initial capital. I am an example, and probably my family is an example of having earned capital in a particular way, the initial capital, and then deploying that in investments and then growing that. So focus on getting a job, focus on getting some capital, some savings in place. The priority always has to be ensuring first that you put a roof on your head, get that stability in place in your life, then start accumulating investable capital and put that capital to work in terms of investment. You can do that even when you are earning a very small amount. There is no excuse. You can do a 500 rupee SIP starting today. So, but be greedy, but be long-term greedy. That's what Warren Buffett says, and I think that's totally applicable to all newcomers who are starting in the market. Don't get into the game of instant gratification. Be long-term greedy. Try and build capital the right way. That's what's going to help you in the long run.
Right. Now, talking about bridging the gap between academics and the real world, have you had to unlearn something or relearn something when you came into the world of work?
Oh, absolutely. Not only from academic world, but even from if you have come laterally from some other job, there is always a lot of unlearning involved and there is a lot of relearning involved. So, in fact, one of the basic premise or the basic quality that we look for when we hire somebody is the ability of that person to learn. And that you have to be a lifelong learner if you want to get into the field of investment and research. That means that involves a lot of reading. That involves a lot of questioning your belief all the time. That involves a lot of breaking down on the ideas that you held in a treasured manner for a long period of time. So, yes, to give you an example of a concept, when you go through college, you go through investment and business courses, you learn that high risk gets you high reward. However, I mean, as an academic concept, yes, it is true. But what I have learned in practical world is there is a difference between perceived risk and actual risk. When the perceived risk is very high, actual risk is actually very low, because most investors tend to adjust themselves to the perceived risk, and that reduces the pricing in the market and makes the actual risk very low. So those are the times when you should be actually taking good investment calls. I mean, if I were to give you an example, just during COVID times, markets were doing very badly. We fell 40% in a month, and that was because the perceived risk was very high, which is how is the economy going to function? We don't know what future holds for us, and prices fell in reaction to that. But that made the odds tremendously in your favor. See, as an investor, you have to think probabilistically. What is the probability that this market will close down, or there will be absolutely no money made for a period of 3 years? And if you would have thought rationally about it, you would have reached a conclusion: what I need is a long enough period to survive this uncertainty, but the odds of making money are very, very high, provided I have that longer term horizon. So that is what gets the game in your favor, and you have to think probabilistic. And that's what I would say, that lower the risk, higher the return. That's how life has worked in reality.
Oh, wow. Yes, so I think these insights can be gained if students go in for early internships and things like that to understand, how the world of work is different from what they learn in schools or colleges. Okay, moving on to the next one. You started Valuequest with 15 organic clients and a team of 10, 12 people with 50 odd crore rupees. And today with 80 plus associates and over 2,000 clients. You built this fine organization, the achievements of which we spoke about at the start of the interview. So along the way, what were your supports? What were the hurdles? How did you find the resilience to face the tough times, and what did the tough times teach you?
So, it's been 14 years since we started off, and we call ourselves a 14-year-old startup. And honestly, it's not been a one-way journey. We have had lots of fits and start, and markets have tested us quite a bit. We started in 2010, and incidentally, post 2014 till 2020, for a period of 6 years, there was not a period which you would call a normal. There were times there was GST implementation, there was demonetization, there was a IL&FS crisis that happened, NBFC crisis. There was COVID that struck. There were laws that were implemented like RERA, which kind of exacerbated the situation at that point of time and kept delaying the recovery in the economy. Finally, post-COVID, we saw that recovery, but for an extended period of almost 6-7 years, market did not go anywhere, and we were facing a lot of challenges. So surviving that challenge, I think, is the biggest. One thing we kind of internalized is that even, if we believe that we are not cut out for this and we don't want to do this, we will not quit when the going is tough. We will survive, and if we have to quit someday, we will quit at the top. So from that perspective, I think survival is the name of the game. Always, if you survive during tough times, then you tend to thrive whenever the next upcycle comes. So lot of mental resilience is needed, lot of soul searching is needed, and you have to constantly correct yourself. The lessons that we learned during that time is what we incorporated in our philosophy, and that's what we learned and built on. And the results, touchwood, have to say that post-COVID, not only markets have done well, but we have also finally recovered from the tough times.
Great to know that, and all the best for you going ahead.
Thank you.
So now with the advent of AI and machine learning, you hear these terms all the time. Do you think that the technology will eventually replace decision making in this field?
See, I believe there are lower end menial tasks which are repeatable, which are automatable, if I were to say. Yes, those kind of jobs which does not involve too much of judgment are at a risk. But if you were to say, will this ever replace the fund management as a business? I doubt that. Not to say that a new space cannot be created where quant-based and AI-based fund create their own space, but it will not replace active fund management where a human judgment is involved. Markets are ever evolving, and if I were to say, it's like a biological evolution, and it it is difficult to put that into a set of codes. So and to respond to that evolving market, you need a judgment, a mind that has gone through those experience and understands the kind of scenario that can unfold. So the human judgment, in my opinion, will never be replaced. But yes, if you are at the lower end of the food chain, which does not involve too much of mental use, then that is a job that is at risk.
So upskilling is always important. Any recourse on must-read books for students of finance and investment?
Oh, there are many books for sure. One thing I would like to say before I give you names for the books is that reading for investment is different from reading when you're, let's say, reading a fiction book. It's not for entertainment. You're reading to learn. It is far more important to read a good book 5 times rather than read 5 different books. I would say prefer quality over quantity. Also, the reading in investment spans an entire spectrum, right? From newspapers, magazines, books, to articles, podcasts, articles, books, journals, papers. So there is a wide range of reading from where you can learn. So not only is it important to read the right things, but read them over and over. And as an investor, it's not a very complex thing. It's a very simple thing. In investments, you need to understand business, you need to understand management, you need to understand valuation, you need to understand yourself as an investor and your process of investing. These are the 5 things that you need to cover. And luckily for you, there are people, those who have gone through this process and have written books about it. So it will shorten your learning curve tremendously if you were to read books on each of these topics. Whether it is learning about business or any of the 5 pillars that I mentioned, there is a lot of material available out there. For example, for business, I would recommend a lot of biographies, the business biographies, whether it is about Steve Jobs, Elon Musk, Alibaba. Those are the kind of, or Phil Knight's Shoe Dog, the Nike story. Those are the kind of books that tell you, what kind of struggle an entrepreneur goes through before creating value. Then there are books about valuations. There are books about accounts, accounting concepts. I don't have ready names for there, but I would say on the valuation front, I would definitely recommend reading and also watching YouTube videos of Professor Ashwath Damodaran. I consider him to be a legend in the field of investing, and I think his concepts are far more practical than most other professors out there. Then there are books about investments and investing behavior, and those one book that I highly recommend for that, which is a combination of history as well as mastering investment behavior, is a book called The Reminiscences of a Stock Operator. That it's actually a history of life of Jesse Livermore, who was a trader who actually in the early 1900s made tons of money, went bust, and ended up dying as a pauper. So that has a lot of lessons that one can learn. What is the kind of emotion that one goes through? What is the kind of mistakes that one does? There is a lot to learn from that. Then there are books about the market history, like the manias, panics and crashes. I would recommend that definitely. From an entry-level point of view, I recommend usually One Up on Wall Street by Peter Lynch, because that is a very easy read. And what I love the most about that book is it makes you fall in love with the markets rather than teach you some heavy jargon stuff. When you realize that, investment can be also something that you enjoy as a journey, I think that solves for more than 50%, because if you pick up an accounting or a valuation book upfront, then you will end up, unless you have an aptitude for mathematics and accounts, you will end up hating the subject.
Do you find any free time from doing so much? And if you do, what do you engage in?
Yeah. So it is challenging. because I don two hats. One is I'm an investor, I manage funds, and second is I manage an investment firm. So donning these two hats does take a toll on the time, but I'm trying to build an institution where my involvement on a day-to-day gets lesser and lesser, which will eventually lead to more free time and quality free time, which obviously I would want to use in terms of listening to music, reading books, spending time with the family, playing sports. I think those are some of the things, and travel, that I really enjoy and would love to create time for that. I right now do try and squeeze in every now and then a little bit of this and that, but I would say the scales are still tilted in favor of work right now rather than more quality time.
Of course. Now, one last question. Ultimately, what do you think is the importance of money?
So money is absolutely very important. People, those who say money doesn't matter, first should make the money and then speak about it. Money is, but don't think of money as an end. Think of money as a tool. Think of money as a means to justifying or means to achieving an end. So if you have made money, what it gives you is the right to spend the time the way you want it. So it is very important to go through the concept of financial independence so that you can spend the time the way you want. And yeah, I think one can never underestimate the role of money. It helps you achieve whatever you want to do in life, but don't think of it as the end goal.
Perfect. Ravi, thank you so much for taking out time. I know you are a very busy person, but I've been wanting to do this for students for a long, long time, and the kind of such valuable insights that you shared with us, I think students will benefit a lot from this. And we will come back to you when students have questions and any other concerns. But for the meanwhile, all the best for Valuequest in the future and all your future endeavors. And thank you.
Thank you. It's been my pleasure.